The market's biding its time right now. I mean, the Dow's dipping to 86 points today. S&P essentially unchanged. NASDAQ advancing 0.12%. And when the market bides its time, guess what? People tend to get a little nervous. For example, usually when a $1 trillion semiconductor company like Broadcom reports a monster good quarter, sending its stock up more than 24%, we get what I call some pit action. But today we got next to nothing in the semis or most of tech. Maybe we haven't been able to mount a rally because the bond market's been down every day this week as inflation runs hotter than we thought. Nobody wants to buy growth in that environment. I think the Wall Street's gotten a little too negative, frankly, as we get oversold, and we're getting there. But I've been warning about stocks going to excessive levels for 2 weeks now, so I can't be all that positive until we see a couple days where bond yields actually go lower with the stock market. That's why we're going to start our game plan for next week with, well, not Monday, but Wednesday, because that's when the Federal Open Market Committee is expected to cut rates by 0.25%. Now, nothing's a given in this league, but we heard from many Fed officials that they prepped us to expect a 25 basis point cut. Okay, now you know me. I hate the endless focus on the Fed by everybody because it detracts you from benefiting from long-term performance for your stock portfolio. You'll trade in and out and in and out. Every little signal from the Federal Reserve brings out predictions, causing many people to sell good stocks when they are freaked out. You also have people who just can't let it go. Dogs with bones. As soon as we get the Fed rate cut, well, guess what? They're immediately focused on the next cut. I think this is absurd. They're endless in their Jeremiahs about the future. And I don't like to scare you. I'm not going to be complacent, but I'm not going to scare you out of your stocks. Don't get me wrong. Fed's very important. But as an investor, it doesn't do any good to obsess over the minutiae of central banking. We don't have an ideological Fed. We have a data-dependent Fed. So unless you have access to data that the rest of us don't, and you don't, all the speculation, it's a fool's errand. I do believe we'll have some dissent this time from the Open Market Committee members. And while I don't think the data is cool enough to be positive about the prospect of more cuts for now, I also don't want you to make decisions based purely on what the Fed does. Contrary to popular belief, there is more to investing than monetary policy, and I wish everyone knew that. They don't. Now, I'll make this point when we have our monthly investing club meeting on the very Wednesday that we have the Fed meeting. I think you'll want to tune in as I walk you through the prospects of each charitable trust holding for the coming year, and some of them are indeed in flux.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.